Ladies and gentlemen, good day and welcome to Q1 FY26 Steelcast Ltd conference call hosted by PhillipCapital Private Client Group. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Dhiral Shah from PhillipCapital PCG Desk. Thank you, and over to you, sir.
Yeah, thanks, Bhavya. Good evening, all. On behalf of PhillipCapital Private Client Group, I welcome you all to the Q1 FY26 earnings conference call of Steelcast Ltd. Today, from the management, we have Mr. Chetan Tamboli, the Chairman and the Managing Director, Mr. Rushil Tamboli, Whole-Time Director, Mr. Subhash Sharma, Executive Director and CFO, and Mr. Umesh Bhatt, the Company Secretary. I now hand over the conference to Mr. Arpit from EY. Over to you, Arpit.
Yeah. Thank you, Dhiral. Good evening, everyone. We welcome you all to Steelcast Ltd earnings call to discuss the Q1 FY26 financial results. Today, from the management side, we have with us Mr. Chetan Tamboli, Chairman and Managing Director, Mr. Rushil Tamboli, Whole-Time Director, Mr. Subhash Sharma, Executive Director and Chief Financial Officer, and Mr. Umesh Bhatt, Company Secretary. Please note, a copy of all the disclosures is available in the investor section of the website as well as on the stock exchange. Further, a detailed safe harbor statement is given on page number 25 of the investor presentation of the company. Please note that anything said on this call which reflect the outlook for the future or which could be constructed as a forward-looking statement must be reviewed in conjunction with the risk that company faces. Now, I shall hand over the call to Mr. Chetan Tamboli for his opening remarks. Over to you, sir. Thank you.
Thank you, Arpit Bhai. Good evening and a very warm welcome to all of you for Steelcast earnings conference call to discuss company's performance during the quarter ended June 30th, 2025. We concluded our AGM and board meeting yesterday and uploaded the financial results as well as investor presentation on the stock exchange as well as on our company's website. I believe you would have got a chance to go through the same. And I have joined today with my colleagues, Rushil Tamboli, Mr. Subhash Sharma, Mr. Umesh Bhatt. Now let me take you to the highlights of the financial performance for the current quarter Q1 versus Q1 FY25. During Q1 FY26, the revenue from operation was 106.7 crore, 38% growth compared to corresponding quarter 77.4 crores in Q1 FY25. EBITDA during the quarter was at rupees 30 crore, a 44% growth from 20.8 crore in Q1 FY25. EBITDA margin was at 28.1%, an increase of 120 basis points from 26.9% in Q1 FY25. PBT during the quarter was at 26.7%, a 52% growth from 17.5 crore in Q1 FY25. This translated to PBT margin of 25%, an increase of 235 basis points from 22.6% in Q1 FY25. PAT during the quarter was at rupees 19.9 crore, a 54% growth from rupees 12.9 crore in Q1 FY25. PAT margin remained at 18.6%, an increase of 190 basis points from 16.7% in Q1 FY25. During Q1 FY26, we maintained a healthy and well-balanced revenue mix with domestic sales contributing 46% and exports for the remaining 54%. We witnessed a strong rebound in revenue across both domestic and export markets driven by continued customer inventory replacement and fresh orders for new components. This recovery not only reinforces the underlying demand trend but also reflects the strength and resilience of our business model, enabling us to deliver profitable growth. Looking ahead, we anticipate the mining and earthmoving sectors to lead the momentum in FY26 with construction and railway industries expected to show meaningful improvement. We currently have over 3 dozen new components under development in the GET segment as well as other segments, which will be a key growth driver this year. Additionally, I am happy to inform all that we expect to ship out initial orders of defense sector for exports, not for domestic markets, where we have already developed and shared product samples with prospective customers. As part of our cost optimization and sustainability initiative, we plan to commission a 2.4 megawatt hybrid power plant under the group captive mode by the end of this year. The initiative is projected to yield annual energy cost savings in the range of 3.5 to 4 crores. Our order book remains robust with strong traction across all addressable segments. In response to rising demand, our capacity utilization improved significantly, reaching 53% in Q1, up from 32% in Q1 FY25. With global supply chain challenges continuing to ease, we expect further tailwinds supporting our growth together with our OEM's China Plus One strategy. We also anticipate margins to remain stable at current levels, reflecting our disciplined cost management and operational efficiency. Overall, your company is well positioned to capitalize on emerging opportunities meeting the growing market demand. Interest from both customers and investors remains strong, and we are encouraged by the continued confidence in our strategy and execution. Since April 1st, there has been uncertainty in the world economy due to the imposition of tariffs by the US government, which has to some extent slowed down decision-making by customers and other geopolitical issues. However, in spite of the above, we will have a growth of 18 to 20% this year compared to last financial year, FY25. With that, I would now like to open the floor for questions. Moderator, may I request you to please take it from here, and thank you all very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Naman Chandak, an individual investor. Please go ahead.
Hello, sir. Am I audible?
Yes, please.
I just wanted to ask, at 25% tariff rates, how are we positioned to pass on these tariffs to our customer in use? Is it a full pass on, or do we have first taken from our side as well?
Naman bhai, do you have any other question, or this is the only question?
No, this is the only question. Thank you for a good set of numbers.
Okay. Thank you, Naman bhai, and for everybody else, I think across India, there looks like a lot of anxiety about these additional tariffs being put by the US government since yesterday. Now, all our sales, whether it is domestic or exports, are all on ex-works basis. Our customers take the goods from Steelcast to the point of use, irrespective of the geography. So any additional tariffs, whatever may be there, has to be paid by the customer. So that is a. So as such, there's no effect on us on additional tariffs. I would also like to share the initial analysis done by us. We have two sets of product groups under HSN codes. One is Chapter 7325 and other is Chapter 8487. In Chapter 7325, the total duties for China, for US is 89%, while that of India is only 38%, which includes the 25% was applied yesterday. On the other product group, HSN code 84.87, the total duty on Chinese products is 79%, while for India it is 29%. So both the groups together, there is a difference of a substantial difference of more than half. So we believe there should not be any effect going forward on our businesses. Thank you, Naman bhai.
As there is no response from the current participant, we will move to the next question. Thank you. Before we take the next question, we would like to remind participants to press star and 1 to ask a question. The next question is from the line of Kaushal Sharma from Equinox Capital Ventures Private Limited. Please go ahead.
Hi, sir. Very good evening. Am I audible?
Yes, please.
Yeah. So my question is on your margin side, right? Earlier we are having around 31% margin. Now we can see if the steeply fall to 26%, excluding other income. So what was the key reason of dropping this margin? And in quarter-on-quarter it has increased from 263.
Uh,
Hello?
Yeah. See, we had this 32.8% EBITDA margins in Q4 of FY25. Now, we have also explained this in the past that about 10 crores have come from foreign exchange, lower input costs, and also cost optimization. So this all happened during the financial year FY25. If you see the quarters before, maybe 6-7 quarters, we were anywhere from 28 to 29%. So we have been consistent with whatever the business model we have, and that 32.8% in Q4 FY25 was an aberration because of extraordinary gains because of input prices, cost reductions, power savings, and exchange rates. But we expect for at least coming 2-3 years to EBITDA levels to be sustained at this level.
At 28%, sir?
No, sir. The 28 is, if you see 28.1% is the Q1 FY26 numbers.
Yeah. Yeah. So sustainable margin you are saying is around 26%, right?
It should be sustainable. Now, if you go back to the earlier investor calls, we have said that the designed EBITDA, what we target is about 21-22%. And then we end up getting another 4-5% from, different cost optimization measures, lower input costs, power savings, some exchange rate gains. So if you see last 7-8 quarters, I think even more, maybe 10 quarters, we have been, managing around 25-26%. So hopefully we should be able to sustain this.
Yeah. So 25 to 26% over the next year will be sustainable.
Yes, it
And
should be sustainable.
there is one point as well that in the earlier presentation, I can see that EBITDA margin is being shown in the presentation by excluding other income. Now we are including other income.
Yeah, but see, in our case, the entire other income is from the income from operations only. Yeah. We at Steelcast don't consider other income, from any other source except the operation of the company. Let me explain you. The components of other income are, one is the interest we are earning on our free reserves. Now, those free reserves have been generated from operations only. A. B. Even the foreign exchange gains are now being considered part of other income. So now those gains have also come from income from operations. So we at Steelcast consider EBITDA margins with respect to total income. We don't have any other dividend income or rental incomes or any other dividend income from some other companies. It's all operations of Steelcast. Hence, we consider total income at Steelcast, including other income.
But sir, in the last presentation in Q4 financial 24, we are showing EBITDA excluding other income.
So before it was like that, but then we realized that we have to put all this is part of income from operations only, or incidentally coming from our operations. And hence this other income has been added on the top line, which says income from operations as well as other income, and then we have total income.
Okay, so now onwards the other income majorly contributing the forex, that's why we are including, correct sir?
Yes sir, yes sir, yes sir.
Okay, sir. Thank you very much for answering the question and best of luck.
Thank you, thank you.
Thank you. A reminder to the participants, you may press star and 1 to ask a question. The next question is from the line of Sahil Rohit Sanghvi from Monarch Network Capital. Please go ahead.
Yeah, thank you for the opportunity and congratulations, sir, on a good set of numbers. If you can give some more understanding on the defense export-related dispatch that you're going to do this year. What component is it, and I mean, what could be the scalability of this product? What is the prospect of this product? That is number one. My second question will be that if you can give me the volumes, the sales volumes for this quarter. That is number two. And number three, number three, I'll have to do a follow-up after I get the volume number.
See, the volume numbers are part of the investor presentation, but nevertheless, I'll give the volume numbers were for Q1, 3,618 tons. And to answer your other question about exports, now, if you see historically, our exports have been ranging from 45 to about 60% or so. This trend should continue even going forward for at least another 3-4 years. So while we get lot of traction from the export market, but we also don't want to miss out the Indian market. So we will continue planning, around 45-50% domestic business and equivalent export business.
Sir,
Now,
my question was... Yeah, sorry, go ahead, please.
As far as scalability is concerned, some components have high volumes, some have medium volumes, some have low volumes. But our capacity utilization has given on the exchanges from last year to this year, we'll do 47 to maybe 53% or so. Next year we'll do about 65-66% in FY27. FY28 we plan to do about 84%. So this is the forward trends we have been working on, and we are quite on track to achieve these numbers. And sometimes towards the end of 2026, we will decide on new capacity additions, because the throughput time required to put up new facility is about 2 years' time. So once we have very clear visibility on our FY28 numbers of about 80-84% utilization, we will kickstart this new investments and increasing of additional capacity.
Understood, sir. Understood, sir. I correct me if I'm wrong, but I heard that we are going to cater some defense-related export order. Is that correct? Did you mention that in your opening remarks?
Yes, we have made a small...
I was asking about that. Yeah.
Yeah. We have made a small breakthrough in defense exports. I will not be able to share on this call about the exact application in the country, but in the month of April, we supplied some prototypes. They went through field trials, and the parts got approved. And now we are doing another lot, which we will ship by September, and hopefully this should scale up, in the coming months going forward.
And would you be able to name what component is this, or you want to avoid that?
That's what I said, that I don't want to name the country and also the component and the application in this call. But maybe at a later date we will see. At an appropriate time we will share this.
Sure, sir. No. Thank you so much, and congratulations for that, sir. Just one follow-up on the volume thing. The quarter-on-quarter or the sequential decline, is it just the seasonality, one Q being a little bit soft for the sales volume? Or is there anything to read on that?
No. If you see historically over the last 15-20 years of numbers, our Q4, whether it's domestic market or export market, the Q4 is always better. So when you see Q1, one would see a degrowth compared to the preceding quarter. But we will have a sustained performance in the second quarter of the current year, and then a ramp up from third and fourth quarter. And that's how we are seeing that compared to last financial year, we will have surely 18-20% growth over the previous year.
Got it, sir. Got it. And you did mention that you have a few dozen of components under development, new components. If you can
Yes.
throw some light on that, which particular segment is this? And
Sir,
if you can
yeah,
give some
these are all mix of 5-6 different industries and maybe 7-8 different customers, and that too going to about at least 6 to 7 different countries. But so these are all part of our base industries like mining, earth moving, construction, locomotives, ground engaging tools, and a very little for defense. But so they are mix of all this, the mix of industries, the mix of customers, and also 6 to 7 countries here. So net, this is exactly as per our strategy where we are wanting to increase our base by way of end user industries, increasing our base by our customers, and also different countries where we supply. So as far as the overall strategy is concerned, we are on track and we'll continue doing this, increasing our base.
Got it, sir. Got it. That's commendable. And lastly, just a clarification, the 2.4 megawatt hybrid power plant, that will get commissioned by December or March? Just want to clarify.
See, it is designed to be commissioned on or before 31st March 26. And this 2.4 megawatt, as I said earlier, will give us some 3.5 to 4 crores of annual sales, which will add directly to the bottom line. And also this will meet our increased volumes for next financial year. So that is this is in line with our sustainability initiative also.
Amazing, sir. Amazing, sir. Congratulations and all the best, sir.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Mr. Dhiral Shah. Please go ahead.
Yeah. Good afternoon, sir. Thanks for the opportunity. Sir, I have 2-3 questions to ask. So first I will ask, sir, what is our current order book as on date?
Next question, please.
Sir, on the railroad side, because in last, call you mentioned that, within 90 days, there will be, some, I would say, approval that we will be receiving. So what is the current status in that, particularly the remaining component where, we were not able to, crack the approval, process. So now where are we in terms of, the overall approval? And regarding again on the defense side, sir, how big that opportunity could be for us in terms of revenue? And lastly, on the ground engagement side, what is the overall outlook, sir, with this new component that we are adding up?
See, one is the current order book as of 1st of August is about 80 crores. On the railroad side, we don't have any good news to share with you. We are continuously trying to see that one component, how do we pass the test. I think it will still take a couple of more months. Regarding defense, this is just one small component of the whole thing. Maybe the revenue from this could be about 10 crores per year or so. But moment we start doing these volumes, the opportunities are quite high. I don't have any specific numbers to give you for additional opportunities at this point of time, but it is very encouraging. And then regarding ground engaging tools, see, as per our plan from from the current year, we will slowly keep increasing our sales to ground engaging tools. And we want to reach about 5% of sales over the next 2-3 year period.
Okay, got your point, sir. Thank you so much.
Thank you. Thank you.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Harshal Solanki from Equity Capital. Please go ahead.
Hi, team. Good afternoon.
Good afternoon.
I have a few questions. One is from the annual report. So you have mentioned that you are trying to increase production of value-added products and venture into advanced stage products, a specialized area which only few global foundries can do. So if you can elaborate, what are you thinking and what can be the opportunity in this side? Is the first question. Second question is, last Concall you mentioned that we are trying to achieve a 59% utilization this year, but this time you have told 53%. So what is changing and why are you revising your estimates on the utilization, if you can highlight that point? Yeah, these are my two questions.
Now, I'll just answer your first question on lower utilization. If you recollect my today's earnings call speech, that since April, since the U.S. government has started putting in these additional tariffs, decision-making across the world, means across all OEM or across bigger companies, have slowed down, right? So with this, obviously the utilization might go down a little bit. However, in spite of this slow decision-making and other geopolitical issues, we will still grow 18-20% more than compared to last year. So it's because of this, I have scaled down this from 57 to 53%.
Got it. And so the first question was, we are venturing into advanced stage products, which is a specialized area.
Yeah. So these advanced stage products in our line, it would mean that, see, so far we have been doing casting and machining. We are taking one step forward in doing sub-assemblies also. Now, this has just been started about 6 months back. The customer would give us additional few components which have to be assembled on our part. So those initiatives have started this. I don't have exact numbers, but very few people in the world in our line of business do this. We might be, few of them who have just started. But going forward, this will increase. So only giving casting or just one value addition of finished machining, this is one more area of doing additional value-added activities of assembling few components and then supplying a sub-assembly together. So we have initiated this. Maybe over next few quarters we might come back that, okay, some percentage of our sales will do as sub-assemblies. But so this is an initiative, and that's why the comment in the annual report.
Got it, sir. So this will be higher margin, I'm assuming.
Yes, obviously there'll be some extra thing we should get. No, nothing is free in life.
Okay, and this will help us improve our relations with our customers further.
This will also improve relations. You increase your competitive scenario. The business barrier also increases. And this is also, you can call it part of de-risking strategy.
Okay.
Thank you.
Thank you. Thank you.
Thank you. Participants, to ask a question, you may press star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles.
If there are no questions, we can close the call.
All right.
Hello?
All right,
Yeah.
ladies
So,
and gentlemen, please go on, sir.
on behalf of Steelcast management, I want to thank each and everyone who are part of this earnings call and having participated in today's call. Thank you very much for your time, and we appreciate your support and trust in us. We hope you will be able to address most of your queries. In case of further queries, you may reach out to our investor relation advisor, Ernst & Young, and they will connect with us offline. Once again, I want to thank each and everyone who are on this call, and thank you
Sorry to
for your
interrupt, sir.
support.
Sorry to interrupt, sir. There's one last question from Mr. Dheeraj Shah.
Okay.
Please go on, sir.
Sir, is there any change in the CapEx guidance, based on the uncertain global outlook?
Now, as far as we are concerned, we are quite confident that we should be on track to achieve the numbers, the capacity utilization numbers as we have projected. Maybe it could be a difference of 3-4%, here or there, but we should reach about 80% in FY28, and for that we will decide, as we have said earlier, sometime towards the end of 2026. And with the China Plus One strategy in place with all OEM customers across the world, and moreover, our duties are substantially lower, less than half than what of China is, as I said earlier on the investor on this earning call. We don't see any change in our customer strategy or our strategy. We should progressively do well over time.
Okay. But sir, again, the CapEx that we have mentioned earlier for FY26, as we were looking to, acquire the land and also debottleneck some capacity, so that is on track, sir?
Yes, absolutely on track. Gujarat government is almost on the verge of allotting us this 100,000 square meters of land. Moreover, whatever capex we are envisaging for the current year, mainly for debottlenecking, that is also in line. There is absolutely no change in our strategy or in our execution whatsoever.
Okay. So, but sir, since we are running at 53% utilization, so the debottlenecking, is it for the particular product, that we are looking for?
Yeah. See, what happens is, we on an average now make about 350 different parts. And sometimes the volumes of some specific parts go high. So one option is to tell no to a customer that, sorry, we don't have capacity. But the other option is you add that capacity and you cater to that demand. So these bottlenecks, come up on and off. And we sort out that by doing additional investments for debottlenecking.
Okay. And sir, is there any scope for revising our capacity utilization guidance? As of now, we are guiding for 53% utilization. But let's say after September or October, if the India gets lower duty compared to the current range, so is there any scope to revise the utilization guidance?
If you ask me personally, all this turmoil, whether it is because of tariffs or whether it is geopolitics, will all get sorted out in the next 2-3 quarters. Life will be very good. The world will grow, and we will forget this these kind of times where suddenly somebody throws us additional duties. So we will come over this as a country, as a company, and the rest of the world will also take this in their full stride. Whatever each country has to do, they'll do, and life will go on.
Okay. Got your point.
Thank you very much. And once again, I want to thank each and every participant on the call, and hope to all see you.
Sorry to interrupt, sir. There's 2 more questions in the question queue. 2 more participants are waiting in the question queue. Next question is from the line of Naman Chandak from an individual investor. Please go ahead.
Sir, can you say about our geographies, worldwide geographies on order book, how it is split across the geographies? And another question was, can you speak more on the value-added product side, like what kind of products are we developing and how better the margins would be for, the higher value-added products? Thank you.
Yeah, like we have said in the past that we are doing 16 countries and we will add another 2-3 countries in the next 1 to 2 years. Now, I don't have exactly country-wise breakup as of now, but I can only tell you that whichever countries which has got lower sales volumes now will grow over the next 2-3 years time. Our major concentration now is between US and Germany, so that should get diluted over time in the next 2-3 years. And then you asked about the other value-added products. As I said, we have just initiated this, and that is the reason for putting the remark in the annual report. It's too early to really say what could be the opportunities and what volumes we'll do for those sub-assemblies. But we have this focus, and once we have some clarity, we'll share with the stakeholders.
Okay, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Sahil Doshi from ThinkWise. Please go ahead.
Yeah, hi. Good afternoon, sir, and thank you for the opportunity. My question pertains to the railroad component opportunity. So could you talk about what's the status on that, and what is the outlook, and is there any change vis-a-vis what we had expected earlier? And,
this railroad thing, we have been struggling to, get this part approved, but the effort is on. When I'm saying that we'll grow 18-20% this year is excluding the railway thing. Okay. If railway thing, if we're able to do in the next 1 or 2 quarters, there'll be some additional increase in growth percentage. But excluding this railway thing, we'll still do 18-20%. And hopefully we will sort this issue of railroad component development in the next 1 to 2 quarters.
So could you talk a little more what taking so long and what's been the challenge? Because since last 3 or 4 quarters, we've been expecting approval, but there's been a constant delay. So could you just articulate what's really gone wrong or what's taking delay and what could be the opportunity?
Let me explain. Every component has got a specified chemistry and mechanical properties. Okay. Now, the component is designed to make sure that we give what customer needs. Now, the component definitely has what is required in terms of the mechanical properties, in terms of composition and all. But when it goes into field trial, we get lesser life. Now, our customers are investigating, we are investigating of why, if the product is right, why are we getting lower life? So that's the mystery, we are working on it. But what we've also done is we are working on several other areas, several other verticals of our existing customers. That, okay, if this railroad thing happens, good. If it doesn't happen, there are enough of opportunities in the world where we could cater to and increase our capacity utilization. Railway is just one part of the bigger picture. So our efforts are on, and we are focusing on how to increase our utilization, whether we do railways now or maybe 2 quarters later or a year later. But the opportunities are tremendous, and India is a favored nation in the rest of the world as a very, very strong competitor to China, and the opportunities are tremendous.
Sure, sir. I appreciate the response. Just in terms of probability, if you had to put up, meaning, is there a probability of this railroad order not converting?
I would say probability of success will be close to more than 85%.
Okay, understood. And secondly, sir, on the defense order which you did talk about, could you talk about the size of opportunity, and is this like a tier 1 or a direct kind of a, I'm not looking for names, but
but
like a tier 2
as I said, for this one component alone, it could be a 10 crore business per year, but the opportunities are tremendous. We could do many other components, and as time goes, we will share this. What are the opportunities? Which is the country? What is the application? Only thing is it's too premature really to share this. But the opportunity is good.
Understood, sir. Thank you so much, sir, and best wishes.
Thank you, sir. And thank you all. And once again, on behalf of Steelcast, I want to thank each and everyone who has spared their valuable time in coming for this investor call. Thank you. Thank you.
Thank you. On behalf of Phillip Capital Private Client Group, we conclude this conference. Thank you for joining us, and you may now disconnect your lines.
If you found this video helpful, please like, share, and subscribe for latest upcoming videos.